AMC short sellers that have been a part of this arbitrage trade that was supposed to be a home run from the start, which turned out not to be, are starting to feel FUD. Fear, uncertainty, and doubt. For good reasons. They're losing 200 to 300% on their short positions in 3 months. This court date just got delayed another 60 days. For anyone that is unaware of the math there, that is 2 months. And on top of that, there's probably not going to be a final decision at the end of June because the magistrate is going to give her recommendation on what the court should do, and that recommendation is likely a revote of common stockholders. If it's not, hey, I've been wrong before, this ain't gonna be the first or the last time, but I don't think I'm wrong on this one. I think that's been a vast majority of the concerns that investors have had, retail investors that have mailed to courts. In almost every one of these letters that I've seen, it's this notion that why are ape shares counted the same way that common stockholders' shares are counted, when after all, it was a dividend, or supposedly a dividend payment, that was received by retail investors. How is that being used against us, and why and how was AMC allowed to sell so much of the voting power of AMC, including common stockholders, to Intera Capital in the first place? How is that even legal? They broke rules by doing that. And this is creating more and more uncertainty, and I think the shorts are about to break. Now, you have AMC earnings coming on April 5th, and I think earnings are going to give us a little bit more guidance, because I think, to be quite honest, AMC would be a lot higher right now, obviously, if the business overall was doing better. Now, what's AMC's major problem? Well, they pay a lot in interest. That's the biggest problem. They pay a lot in interest on their debt, as well as they're not to a place of profitability or free cash flow positive. They were actually, fun fact, free cash flow positive about $9 million for the month of 2022, but overall they were still losing money. I think this could shortly, or quickly I should say, come to an end for a couple reasons, right? Number one, they just launched their credit card business. Now that's going to take some time to get up and running, to see revenue from that. It's not going to be on this quarter. It's probably not going to be on the next 2 or 3 quarters. But down the line, that's something to look forward to. But popcorn, that will start to bring in some serious revenue, in my personal opinion, because, I mean, let's face it, if you're in the aisle looking for popcorn and you see AMC's brand, you're 9 times out of 10 going to choose AMC, even if they had a less quality product. This is funny because let me take you guys back to a survey, a very popular survey that was done where 1,000 people were given blank bottles of Coca-Cola and Pepsi. And they were asked to try both and to report which one was better. About 65% of people preferred Pepsi to Coke with the labels off. But when the labels went on the bottles, about 70% of individuals preferred Coke to Pepsi. It was concluded that more people liked the taste of Pepsi, but the brand of Coke was stronger. And I think that is something that's going to be very important for AMC. Now, investors and analysts are going to have to try to kind of price this in to what this could mean, how much revenue, how many millions of profits would this take to the bottom line. And I think that's something that's not fully realized yet, because we don't know just how the numbers are going to look for this, right? The popcorn is rolling out in 2,600 Walmart stores as of 2 days ago. So we're probably not going to have some serious numbers to report. Now, in select Walmarts, their popcorn has been on the shelves, and we'll likely get some numbers there. Adam Aron has indicated that the popcorn is selling, quote, briskly in its first couple of days and weeks being on the shelf. So I think that is a good sign. Now, the stock market is forward looking. So while a lot of people have this bankruptcy concern, AMC has $840 million of cash in the bank. And let me be clear, on a worst case scenario basis, they could go to the marketplace and raise capital. Obviously, that's not what you want to hear, but that would be a possibility. So I don't think bankruptcy is in the cards here, because I do think AMC will get to a place of free cash flow, and I think that will help AMC stock to rally upon earnings. Now, it's important to keep in mind the context of how AMC stock usually fares around before and after earnings, because AMC, it's usually not pretty, right? Heading into earnings, you usually sell off. And the day of earnings, you usually sell off. The day after earnings, you usually sell off. Take, for an example, back here in May of 2022. You had earnings on May 9th, and that was Tuesday? Or that was a Monday, it looks like. Okay, that following week before, Wednesday, you sold off 6.63%. Thursday, you sold off 6.3%. Friday, you sold off 9%. And that was the day of earnings. Day after earnings, you sold off 5.5%. The day after that, you sold off 12%. And then you bottomed a couple days after earnings. And then what happened? It was beautiful. Ladies and gentlemen, AMC stock from the lows 3 days after earnings, just 53 trading days later, went up 184% from roughly where we are currently trading at, about $6 per share, $5.80 per share, to a high of about $17 per share. And that's only one example. All earnings, most of all earnings, I believe there's only one earnings, and that was, I believe, November of 2021, when AMC actually fell and never hit a new high. Same thing back here. What happened in November of 2022? The stock sold off, down 7.66%. On November 1st, November 2nd, sold off 5.5%. The day after that, November 3rd, sold off 2%, sold off another 1%, and then another 5.66%. And then you sold off 5.4%. Day after earnings, you're down 8%. The following days after that, 2 to 3 days later, you're up 18% on November 10th. You're up another 18% on November 11th, and you proceeded to hit a high of about $9 per share from the low of $5 per share. And those are the most recent examples, but the same can be said for, the history of AMC in this MOAS trade, right? You had earnings back here on March 1st, 2022. The stock actually went higher heading into earnings from about $9.20 per share to when AMC reported earnings, they were sitting at about $12 per share. A decent rally right here. And then what happened? You sold off for about 2 weeks after earnings. You came down, you hit the low, and then you rallied. Get this. From $7 per share all the way up to $21.20 per share. That was a rally of 166%. So you guys are starting to see kind of this narrative here, right? Even down right here, this is the one earnings where you kind of sold off after earnings, and then you rallied back, but you didn't break that prior pre-earnings rally, right? You pre-earnings rallied, and then the day after earnings, you fell 11%. You fell for 2 more days, and then you rallied for a couple days, but you didn't get back up to that level. Every other time since January of 2021, during this whole period of this trade, you have followed the same pattern, right? Think noticeably right here in March of 2021. You rallied into earnings, you sold off 1 day after earnings, really 2 days after earnings, you recovered this day on March 5th, and then it was off to the races again. and you rallied in total from $5 to about $9. And then, very notably in June, or May 6th, 2021, you actually sold off heading into earnings. You rallied the day after earnings, the red day the day after. Then it was off to the races. Then the stock 10x'd in value. It's basically the same story every time. Like literally every time. You're at the lows heading into earnings or slightly, a couple days after earnings, and then you absolutely rip after earnings. Follows the same pattern. Literally the same pattern. Last time around was a little bit different. In February of 2023, the stock actually rallied into earnings and then sold off after earnings. And now we are on this uptrend, but obviously there was this arbitrage trade going on, so it reacted a little bit differently. But nonetheless, you look to be in a very positive position right here. I mean, again, you're retesting the 50 and 100-day moving averages. You're trying to break out above that. If you get a close above that and you can hold above that, then you're going to this upper end resistance line. That's going to be in the $6 range. And if people start to get more FUD, these hedge funds, fear, uncertainty, and doubt around this trade, that, could increase that FUD that institutional investors feel after earnings. Well, I think it's possible you could see a massive short squeeze here. How could it not be possible? How could it not be actually a decent chance, right? Look at the history that we just went over with AMC Stock. That's not looking at every single earnings, but that's looking at a lot of them, right? And the same story tends to be true over and over again. You most of the time sell off into earnings, and then you rally after. Sometimes you sell off before earnings, and then you start rallying the days leading into earnings, and then you rally after earnings, then you come down. That happens sometimes, but more times than not, you sell off into earnings and then rally after. Now, this time might be a little bit different because hedge funds are feeling that FUD, and 26% of the short interest or 26% of the flow of AMC is currently sold short, when in all reality, this is not a home run trade. The judge can do whatever she wants to do, and it doesn't look likely this is going to be over anytime soon. If you add the extra uncertainty, fear, and doubt around AMC becoming profitable, meaning that hedge funds are going to be like, oh my gosh, maybe AMC can turn a profit here. Maybe they don't have a bankruptcy risk anymore. Oh man, this ain't looking so good. The judge ain't going in our favor. You could see how this dynamic could start to build and squeeze shorts out of their short positions. It doesn't all happen at once, right? You get the smaller shorts. It's kind of like a pyramid, right? You got the top guys at the top. That's like Citadel. That's like Ken Griffin, the wealthiest hedge fund manager there is. Up at the top, that's State Street. That's those big guys, right? That we've talked about over the years. And then at the bottom, you got your guys that are heavily using leverage, that have portfolios in the range of maybe $1 to $5 billion, some low tier players here. Likely only have a couple thousand shares short, tens of thousands of shares short, not millions, right? The smaller guys. Well, they start to cover, drive up the share price of AMC. Then those mid-tier guys, really that like $10 to $25 billion asset under management hedge funds, they start to feel the squeeze. At this point, with the cost of borrow rates where they are, they're probably going to start feeling that squeeze around $9, $10 per share. They're going to be like, oh man, this is taking a lot of collateral. This has a big risk involved in it. We're going to have to cover on our short position. It's not worth it anymore with AMC's fundamentals improving the way they are. And then once you get to like $15 per share, that's when I think the big guys start to get a little bit worried. And I think that's what we could be facing. It all depends on how good earnings are, right? AMC tends to be on earnings. They tend to say some very positive things. And I don't think this time's going to be any different, given we do have this court case And a lot of investors are concerned about the longevity of AMC if this reverse split were to not go through. It's been one of the most popular comments that I have gotten on any of these videos is, well, hey, if the reverse split doesn't happen, doesn't that mean AMC goes bankrupt? Absolutely not. I don't buy that for a second. The numbers don't support that. AMC would have a year to 2 years minimum, right? Probably in, down the middle there. Probably a year and a half if they just stayed at their constant rate. If things didn't even improve that much. So I think they'll be fine, right? Long story short. And I think that's going to be a very bullish thing for AMC share price because we don't have our next court date until June 29th. That's a lot of time. That's a lot of fees to that cost to borrow rate that hedge funds are going to have to pay as well. And think about it. There's only a max gain of about 150% that these hedge funds can realize off of this trade in total. If they're paying 200-300% cost borrow rates, if they're paying 3 times the amount of their whole short position and cost to borrow fees in 3 months, well, I mean, add a couple more months to that, add 3 to 6 more months on, and the fundamentals improving. Very compelling case for a short squeeze. Now, if we do go ahead and take a look at AMC's Ortex data here on the day, I just want to give you guys a brief update on where the numbers currently sit. AMC stock is up 1% at the time of recording this video. Option activity has done a whole lot of nothing. 4 orders totaling $225,000, positive order value of 0%. If you take a look at the overview here, AMC's short score is 89, so AMC is way high up there in terms of potentially getting a short squeeze. And they typically are way up there on the list, right? Tends to be a very highly squeezable stock. Now, the estimated short interest of free float is 26.3%. Free float out on loan, 10% higher than that at 36%. Shares out on loan, 185.9 million. Cost to borrow rates, the trailing 3-month average at 258%. Take a look at this. The last 18 months, guys. Look at this cost to borrow rate. Can I zoom in on this? Is it going to let me zoom in? I think it might let me zoom in, actually. Yeah. Okay. Yeah, let me zoom in a little bit. Look at this. This is the cost to borrow rates over the last 18 months. In freaking July of 2022, the trailing 3-month cost to borrow rates were 13%. In February and March of 2022, the trailing 3-month cost of borrow rates were 1%. These were when shorts were actually, it didn't make sense to short AMC, but it made a little bit more sense on a pure mathematical basis. Look at what's happened recently. Ever since really December of 2022, the trailing 3-month cost of borrow rates went from about 30 to 40% all the way up to 200%. Came down a little bit in March to 175% and back on up to about 300% as of the end of April 24th, 318%. This chart has been nothing but straight up. The utilization has been at 100% since, I'll tell you the exact date, February 9th, 2022. It literally has not moved. There's a dramatic need for hedge funds that are short in this name to even have shares available that are just not available. If you take a look, and I think this is very bullish, the average days out on loan. This is sitting at about 120 days, literally 3 months. And short sellers lost 3 times their total short position value in cost to borrow fees. Not to mention AMC stock up from the lows. I mean, if it doesn't get more obvious that shorts are in pain here, that shorts are struggling, I don't know what else could be more obvious. I don't know what that obvious factor would be. It's as obvious as it's going to get. We are on the brink, whatever word you want to use, of seeing a short squeeze. Now, does this happen tomorrow? Probably not. Does this happen next week? Probably not. Is this going to be highly forecastable? Probably not. You're probably not going to have too much notice. You're probably going to wake up to some kind of catalyst that causes AMC stock to rip 50 to 100%. That's probably how this thing's going to go. If I were to throw a bone out there and just imagine with you guys. But does it look likely that it's going to happen? Absolutely. I mean, point me another stock that looks more likely to short squeeze than AMC, and we can gladly have that discussion. Keep in mind, not a financial advisor, not your dad, not your cousin, not your uncle, not your grandpa, not your grandma, not your mama, not your kids, and none of that. So come to your own conclusions. I'm not a fortune teller as well. Maybe I should put that in there. I do not have a crystal ball. I have been wrong before, and I will be wrong again. But I doubt I'm wrong on this. Give it enough time. Apes, we are here and we are not leaving. We own the float. Don't get me too excited. Don't get me too hyped up, baby. We could keep going. But I'm not going to do that to you guys. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description of this video. We have been busy today making some trades because it is earnings season, the best season out there. Yeah, we got a couple trades. We're not going to get in on that all too much. But if you guys want access to it, link down below in the description of this video. And I am starting to do this, which is pretty cool, kind of breaking down how to do each individual strategy, especially the ones that I really like to use myself, right? Because I give explanations on why I'm making trades, kind of how I'm making trades. But if the markets are up, down, sideways, in effing circles, like Matthew McConaughey would say from The Wolf of Wall Street, it's important that you guys know what strategies work for what kind of market you're in, so you can be profitable on a more consistent basis than you're not already. And what I like to do is just give ideas out there. Like, I'm bullish on Crocs. I'm bullish on AMC. Kind of bearish on Teladoc. Kind of bearish on Facebook, right? And I kind of give my reasonings for these things. But again, not financial advice. Thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.